Hello friends, this is Bank Nifty 5 minutes chart on 6th October 2022. We have seen that price is going higher highs in the last few days, and then there is a hidden reversal at this level, and then market crash immediately after that. If you are keen to observe price action and if you know how to make use of various techniques to identify market edges, there's a great possibility for you to enter a short trade at this level. That is possible with the integration of multiple techniques all converging at the same level, signifying a major reversal. To check how this is possible, first we need to know what is a major flow and minor flow in the market. Clearly, these are the major flows. We don't have to look back into all the backdated information, because when you there is some advantage when you look into this data, but if you put more attention to backdated data, you might be missing out what is currently happening. So we just limit our candles to not more than 50 to 100 or maximum 150, and then try to make our analysis. Given that note, this is the major flow, and then you have seen major flow taking higher highs and creating solid structures in this low. Now the major flow has taken a step back. That means sellers came into picture immediately after this point, and that too after closing this high. So many people who might be thinking that retail breakout traders after breaking this high might be tempted to go long after this call when there is some reversal at this point. But this is a major point to observe, that this is not the point where you have to go long taking it to breakout of this high, but this is the point where you have to go short. So that is how we are going to look into market when such breakouts happen. So let us find out how major flow and minor flow are syncing together, signifying this reversal. So this is a major flow drawn in the black lines. Let me draw the minor flow as well. So when I put the minor flow, I will mark it in different color. So when minor flow and major flow both converge at one point, both exhausting at the same level, then you can think about that both flows are converging and then taking a reversal. So if I put this in blue color, major flow has taken a step back at this level. That means sellers coming into notion with the dynamic frequency breakout of this inward frequency, and minor flow also is taking a pause. So this should give us an impression that we have to now check with more facts to see if this is a major reversal towards downtrend or not. To do that, first we have to draw a pitchfork between the latest highs and lows. Okay, uh, 1, 2, and 3. Okay, so in this pitchfork, you can see that price is taking a halt in the major flow in the midline of this pitchfork, and in the minor flow dimension, if you look at taking the highs and lows into picture, let me indicate that with another color. In the minor flow also, price is taking a step back at this level. To make it more accurate, there is a frequency shift at this level. If you adjust this frequency, if you took the latest frequency, you can see that both major flow and minor flow are getting synced at the exact same level with the intersection of pitchforks from major and minor flows in this market. And this alone is not sufficient to assume that this is going to be a major reversal towards downside. Let us check with other facts like uh, volumes. Okay, so if I bring in the concept of volumes here, okay, price is going higher high in this level from this high to high, whereas in price in volumes histogram, price is going volumes are going lower highs. That means though this flow seems to be in a major dimension, it doesn't have much weight in terms of bias showing the strength. So there is a deviation in terms of volumes at this level. Let us also bring in the concept of volume weighted average price anchored at some specific intersections. It is something like Bollinger Bands if we use, but if we anchor it to specific low or high, that will be a very useful tool to figure out the edges. Now in this section, I have anchored that to this low, okay, and sorry, this low, this high, because this is the high where market has passed. Now this this volume weighted average price doesn't show any observation, I mean any point of inflection at this level. However, in the midline of this VWAP, that is the exact VWAP, price is showing some support. That means this is a valid VWAP. However, it is not showing any kind of observation, that means price reversal at this level. This is when we have to open up the idea of putting up upper bands to this VWAP. So if you see now the standard deviation, that is 2 sigma deviation to this normal VWAP, price is showing some sort of resistance. So this is a fourth level of analysis that price is taking a resistance at this level. We have so far pitchfork intersecting from major flows minus minor flows. We have volume divergence. We have divergence, I mean price being respected VWAP in the anchored level at this low. Let us also bring in the concept of momentum analysis. If you bring in momentum analysis, price is creating higher highs in this level, whereas in its relative strength index, it is showing lower lows. That means there is divergence of price with respect to RSI as well. Now, these are sufficient enough for us to assume that this is going to be a major reversal. And we don't have major stop loss to keep above this high if you are going to short here. To identify the specific edge of that market where this price is going to reverse, we have to draw a pitchfork in the major dimension because this is going to be a major reversal. So 1, 2, and 3. See, now price is respecting this pitchfork in the outline of this pitchfork with a strong bearish candle, a fractal candle, and that is happening at the inward frequency of this small flow. So this alone is sufficient for us to go short at this level with a dynamic target of a low at this pitchfork. Okay, because this is going to be a major reversal, we can assume that the price will take a lower low on the lower end of this pitchfork. However, you see this pitchfork has exceeded its outline line in this level. If that is because when price reaches the midline of this pitchfork, it tends to change its frequency. So to adjust its frequency with respect to this pitchfork, all we have to do is put this pitchfork the latest highs. And then you can see that price is now respecting the bottom levels of this pitchfork very beautifully. So if you are going to assume a trade here, in the short trade here, this is the risk and this is the reward. If you observe this in terms of risk management, let me put up, this is the risk that you are going to assume and the reward as much as this one. This is 1 is to approximately 13.09, roughly speaking, risk reward ratio. This is the kind of trades you have to look for, guys, and hope this makes some sense to you. If you are interested to know these advanced techniques of price action, please do reach us to us. We can put you into one of our courses and help you develop such advanced trading styles which normal retail traders might not be able to guess even. Okay, so thank you, and let us connect in another video. Thank you.